which is a proof of our exposure to climate risks. If we consider, for instance, the global meteorological systems between 19 something and 2019, there was disasters and it led to more than 500,000 people and economic some loss that gets to $38 billion. That's the continent. There are flooding and most disasters that affected the continent. With that exposure to for our continent to climate change, there are some modifications of the profile of the continent. So, in line with this scenario, insurance companies are facing a hardship because they are not able to cover all the risk. They are not able to do that. And here we have two typologies of events in the market. One side, more the disasters increase, more the cost is. Then that's a very crucial issue when we talk of insurance companies which also raise their rates. So in 2022, for instance, tariffs were increased in renewing their agreement. North America, for instance, it has been increased to 19%, while in Europe it was about 4%. The other attitude or behavior that we notice that insurance companies prefer increasing their rate as far as natural disasters also are increasing. In this framework, what should be the possible solutions for the sector while ensuring a maximum coverage for the continent? What is sure is that the sector should be adopted and enlarge its capacity to absorb the risks connected with climate change. There are some acts that should be examined so as to offer the insurance market possibilities to face the situation. Very simple. The first one, ecosystem, should also be considered so as to improve climate issues and we'll think of having resilience in which we should, the population should be assisted. The first axis, it has to do with the companies, and these companies should better understand and apprehend climate change issues on their activities. They should understand it and involve it, and also think of calibrations. Still, in the continuation of the first or the previous point, they should think of having prospective climate scenarios, talk of a subscription, which should be in line with their capacities based on their experience and being sensitized to face some risk. The fourth one, the ecosystem, and there it is important, therefore, for the ecosystem should be committed. They have to. Otherwise, reassurance companies cannot work alone. And institutions should put in place new mechanism. And then we can talk of the reinsurance mechanism from the state. And this will help to cover those type of risk, and we will not exclude them. Insurance companies should not exclude it from their process. Now, we can also talk of parametric insurance so as to face insurance security, CatNat, and meteorological derivative. And Well, we do not have some of them in Africa yet. There should be financial tools which will have to mitigate the sector so as to face the climate change. That suggestion of transformation constitute leverage for the current challenges and also for the future challenges because as time goes on, the climate change will still continue a serious challenge. This will help us to face the vulnerability of our population. By way of solutions, there should be a panel with many experts that will intervene. Thank you for your attention. Thank you, Sana Tig, in charge of insurance for Francophone insurance. Thank you for this guiding, and I will invite you to get back to your seat with your round of applause. What I notice is that right now we have 106,600 in disaster and more than 38 millions. And these are important losses. And the more the risks are, there's also need for the ecosystem to be adapted. So I will now invite the panelists to come and join me. The first person I will invite is Madame Delphine, the CEO of Finance Alliance. Also, I will invite Madame Kesewa Brown, the chairperson of Ghana Insurance. Madame, welcome to the podium.
Vivia, Deputy Managing Director of Africa Reinsurance Corporation. Alors, Laurence Nazaré, Group Managing Director, Continental Reinsurance. Et en attendant l'arrivée du ministre, Alain Kaninda, Managing Director, Insurance Regulatory and Supervisory Authority of DRC. Voilà, donc on parlait de...
We were talking of regulation, of the ecosystem, and there the ecosystem is well represented. Two regulators, one insurance company and two insurance reinsurance companies too. So a Pan-African company who will represent our experts, some of them that are not here. I will start with Madame Delphine Traoré. You are the CEO of Salam Alliance, a major group well known in Africa. How do you apprehend those risks which increase from year to year in Africa these days? How could Alliance face that natural disaster?
I think part of the report, what we also need to add is that what was the economic loss for Africa, right? Because we talked about the economic loss for the world, but when we look at 2022, Africa had about 8 billion in economic loss, and this is what we can count, right? Because some of the losses we cannot always account for because maybe people are a bit farther in the villages. Today, if we take the case of the earthquake in Morocco, because it was quite far, and most of the people were uninsured, you don't always have a full view of the cost. But when we look at it, 8 billion in 2022, most of it was uninsured. If we take the case of one particular country, I'll take Nigeria, for example, there was an economic loss of over 2 billion, and only 100 million was insured in Nigeria. So when we look at this issue, it's not an issue that we can look at as just an insurance company. It's an issue that we need to look at with our brothers from the reinsurance sector here, and see how we put a structure together to be able to insure these risks. But more importantly, we need to also remember that it's not just an insurance industry issue, and then we will have that conversation later. We cannot just rely on the insurance sector to cover all of the risks that are out there. There's an opportunity for the whole financial sector to come up with different financial mechanisms to also release the pressure on the insurance and the reinsurance companies, especially in Africa. I'll take one example and I'll be quiet. Africa Risk Capacity, which is the insurance arm of ARC, which is an African Union organization. They had insurance offers up to 1 billion for Africa alone, and paid almost 125 million in the past few years. That's not enough. That is not enough.
Merci. Merci. Donc, vous avez dit que les...
Thank you very much. You've said that the losses in 2022 is about 8 billion for Africa, and there is an approach that will go beyond insurance companies get to market so as to have a common position. Mr. Kaninda, you are the CEO of HAG, and that's the regulatory and supervision insurance in DRC. How you, as a regulator, how do you apprehend that risk which is current on our continent? Thank you for giving me the floor. The Director General of ARCA. So I don't want to go with ECA. So the question related to climate risk is important. And as Madame Traoré has highlighted it, these are risks that are beyond the capacity that might be available, be it at national level or at continental level. So these are still new concerns, and there's need for us to be sure that our clients, our customers of insurance and reinsurance companies are the most protected. They should have a contract with those who are offering insurance, offering us insurance risk on the market. These are the risks which, once again, we could not pretend to have all the information about that and propose the specific and necessary product to meet those needs. But nevertheless, the approach you have today, we've mentioned it recently, and we're having a close look into the market to make sure that products prepared or offered by insurance companies are controlled. We've talked of parametric insurance, which is also a notion which has been developed within the sector. And these are areas on which we should go so as to find solutions to the different risks being presented in the market. But also, we've said it recently, the intervention, rather say the transfer that insurance companies should do beyond what they have with the reinsurance companies for the policies to develop in the risk coverage, and also consider those risks so as to share them based on insurance impact, so that they should take everything into account. That's an important aspect of it, and we could see that that's the case of DRC, where we put in place a new specific regulations which was not planned for or provided for initially in the text. It talks about micro insurance, parametric insurance, so as to find solutions not only for big disasters, but also for micro operators that are in the market. We are working with the government at national level, with regional institutions. So we discuss with World Bank, and we also try to put in place specific products that will cover agriculture area with solutions offered by parametric insurance. That's briefly to say that we are having the same concern of being sure that what we do before the product are being discovered, and we do that in a way that the tariff being proposed are validated by the operators. But I must confess that we are trying to, or we must better perform in that area. So meeting the need of the market, that's Mr. Alain Canida. I must say that you are the CEO of ARCA, the authority in charge of supervision of insurance in DRC. I will yield the floor to Mr. Bernard Kesewa Brown, who is the chairperson of the National Insurance Commission of Ghana, asking him. We have the privilege of welcoming the Minister Jean-Marie Tessi, the Minister of Youth Care of Togo, and a round of applause. Your Excellency, good morning. We've listened to some of the experts, especially about disaster insurance in Africa, and also align with the natural disaster and what should be the impact of insurance companies. And with your kind permission, I will still continue proceed, and I will come back to you. So I'm going with Madam Kesewa Brown, the chairperson of insurance in Ghana. You've listened to your colleague from DRC who spoke about inclusive insurance with parametric insurance. I would like to ask you, the issue of our own fund is taken into account in your own system as far as natural disaster management is concerned. What is your view? What is your saying?
Good morning to all, ladies and gentlemen. Finance is really at the heart of climate change. Madame from IFC has just given us data. Change is actually happening now, and action is needed now to avoid a tipping point. There are many categories, as she talked about: the physical, the transitional, and the reputational legal issues that relate to climate change. Elsewhere, we talk about global losses. She's actually zoned it down. So we're looking at about $5 trillion.
You can approach the mic.
Okay, that's better. They're looking at food, which is related to agric. We're looking at water shortages. Now, insurance are challenged, which, of course, the regulator needs to keep a close eye. So our key challenge from insurance, and we are talking about profitability, and which we gain through, increasing our premiums. The thing that at the moment, if you look at the industry, I'll use Ghana, for example. Their biggest challenge is underwriting versus the investment income. This is a big challenge because the industry players are actually fighting amongst themselves on the undercutting that is going on in the industry. The lack of, because of the economic factors of most of our African countries, do not have enough investment instruments, and therefore that's also a challenge for the industry, because there are certain things that we have to invest in long term. Madam from IFC talked about catastrophic bonds. Question will be, who has it? The other question will be, what is the reinsurance going to do about that? Are we still going to defer to the developed world? So when we talk about the weakening of the coverage, from my point of view, I will agree with Madam, this is beyond the industry. However, globally, we've had the COP27. We are going to have COP28. There's specifically a loss and damage fund that is supposed to be funded by the developed world. Now, the science and the politics, of course, whether that fund is active or not. But the question I have for Africa and our leaders and our industries is, are we on the table for these discussions? Because has the industry thought about how we can leverage on this fund and on the loss and damage fund to lower our costs and to support our industry? So a lot of collaboration has to be made. As far as regulators are concerned, our key challenge is capital regime. How much capital do our industry have? In Africa, we are not, apart from probably South Africa and the companies there, most of the other companies are, capital is far lower than needed compared to the banks. So regulators are also required to approve some of the investment instruments which do not exist. And even when it exists, in this case of Ghana, we got a little trouble because we prescribed instruments that we had a problem because of other factors. So coming back to inclusivity, I think in Ghana we just had a conference for the insurance industry about inclusive insurance, which focuses a lot on agri. And as regulators, it is our responsibility, even though we usually lag behind, we don't really have much of a choice but to try to speed up, to support the industry, and to make sure that we put in the regulations, but collaborate with the industry to make sure that we are not stifling, but rather helping them to have the right things in place to support the customers' protection. Thank you.
Thank you very much, Madame Abena Kessawa-Brown, for your remarks. Je note une chose très importante au niveau international.
I've noticed that at international level, we have a loss and damage fund that was implemented last year, and that could be discussed during the next COP in Dubai, because this is also part of the climate change issues for the protection of southern countries. I also noted something which is important, what you said, that is to try to protect the insured people and to extend insurance And for African countries, the regulators should certainly find a solution so that the issue of natural disaster should be taken into account jointly by going far than simple being in the simple perimeters of insurance, also taking into account the bond issues because there's only one experience in the world from World Bank, and we're still waiting for more ideas about that. Continuing, I will get to Mr. Agogo Via Ken, Deputy Managing Director of African Rep. Mr. Ago.
I will address it to you in English. From the lenses of an African reinsurer, what are your thoughts on the impact of the mounting catastrophe risk in the continent?
Yeah, thank you.
Approach it too.
Please get the mic closer to your mouth, please. Thank you. That's what he's saying. Go on.
Fact that
Not yet.
Still closer, still closer. Okay.
I don't think anyone here would be in doubt as to the fact that catastrophe disasters is becoming common in the sub-Saharan Africa. When you look at what has happened in South Africa, the KZN floods, you look at Mozambique and the rest of that Aziz, Cyclone Idai, Freddy, you come down to the North Africa, you see the Libya floods, the Morocco earthquake, and even the West African floods, which was predominantly in Nigeria. Indeed, 40%, more than 40% are affected, of the region's population are affected by these cat events. And negatively, they are impacted by the production or loss of production in their farm produce. Thereby, it impacts, or rather affects, let's put it this way, it worsens their poverty cycle for mostly the vulnerable people. So if you, against this background, we would want to look at we know that flood is a predominant peril in Africa and really accounts for maybe in terms of, for the most of its incidents, and over 92% of economic damages. We see the impact, maybe if you want to look at, to have a clear idea of what the impact would be, I think we could take a look at what happened in Libya. In Libya, we had about over 2,200 buildings were destroyed. We had about 80,000 displaced, and 10,000, if we want to go by Atlas, it says 11,300 dead. So these disasters have impact not only on people, on businesses, on the government. In the case of Libya, we still don't know what the economic cost or damages could be. But if you want to go by what happened in Nigeria, I think someone made some allusion to that. We put the economic cost to at least 3.8 billion. It's a range between 3.8 and about 8 billion, which is about 25% of the 2023 national budget. So what would happen if a country, without a plan for all these events, have to deal with them? How can you upset your budget because of these disasters? So these are issues that at different levels, I think somebody talked about multi-stakeholder approach. At different levels, we need to come up with solution to how to resolve this, this new problem. Because, like it's been said, it's not only more frequent, it's even more intense. You know, if we look at the World Weather Attribution Consortium, I think they did a study on the KZN flood, where they said its probability is 2 times. And a similar study done in Nigeria, the West African flood, put it at even 80% more likely it happens again, and 80 times, sorry, and 20% more intense. So we are having a problem, and this is a problem that not only insurers, it's a problem that the government and even the international community needs to look for a solution. Thank you very much.
Okay, thank you very much, Ken Agobovia. Donc, comme vous avez dit, c'est plus fréquent et c'est plus...
As you've said it, thank you very much. It is more recurrent and intensive, and it has to do with the role of our different stakeholders. And I will move from insurer to another. Mr. The CEO of the reinsurers are more exposed because the transfer of risk among the companies and the market goes through them. How today do you consider the equation of natural disasters, knowing that you are involving more capitals, and does it not cause more problem for the survival of insurance companies? Mr. Nazare.
I think I would like to address this issue, like the question that you've asked, in the context of capital. For risk financing, you need capital. And then if you look at the topic for this session here, we are talking about keeping insurance profitable, you know, boosting capacity to absorb mounting risks. What this suggests is you're actually deploying capital that needs a return for you to be able to, you know, fund risk. And that's where the difficult conundrum is for Africa currently. I'll address the question in the context of 2 things. You know, profitability, on the basis of the impact of catastrophes on the asset side, the impact of catastrophes on the liability side, and maybe also try to address probable solutions to the problem that we are faced with in the context of mounting climate risk. You know, first looking at Africa currently, I think we are talking about climate risk. We are talking about nat-cat catastrophes. But one of the key things that I would want to highlight as a private reinsurer deploying private capital to manage risk in Africa is really the economic catastrophe that we are faced with on the continent currently. If you look at the asset side, you've got mounting inflation, which is primarily a consequence of significant devaluations of currencies. We are looking at the issue of negative asset returns. In the context of that very, very high inflation, we are seeing significantly degraded returns in terms of yields on investments, which is a critical component of the insurance or reinsurance value chain. You have significant issues around sovereign bond impairments. We are all compelled by regulation to invest in sovereign bonds, and we have all been severely exposed to significant impairments of sovereign bonds. And all of that has had a fairly significant impact on the balance sheets of African insurers and African reinsurance companies. So that economic catastrophe significantly impairs the capacity that we are talking about for us to be able to underwrite risk. And then if you look at the liability side, inflation and insurance are not the best of bedfellows. It is not viable for you to run an insurance or reinsurance entity in an environment with double-digit inflation. It's just not, it doesn't work. The insurance, the structure is completely, appended in the context of the current inflationary pressures that we are faced with in Africa. So you're seeing significant claims inflation. You've got a soft market. Madame alluded to the significant price inflation that we've faced in Africa over the last 10, 15 years now. And that price competition is juxtaposed against fairly significant increases in the global markets, including in terms of the cost of our own reinsurance as African reinsurers. We buy reinsurance. Ken and I, Africa Re and Continental Re, we go to global markets to buy reinsurance. Over the last 3 or so years, we've faced increases to the extent of almost 50, 60% of what we are buying. And those costs, we have not been able to pass them down to the local markets. And then you've got significant margin pressures in the African market. 10 years ago, reinsurance margins on the continent were in excess of 10%. Right now, we are really having to survive on margins of about 4 to 5%. And that all is exerting significant pressure on the profitability of the business. How do you then, in the context of this, as an African reinsurance company or an African insurance market, how do you respond where you are required to be providing extra capital, where you are required to be providing extra capacity to manage an ever-increasing scenario where the severity and the frequency of claims, if you're looking at the pricing of insurance, you're looking at those two aspects, which is really severity and also the frequency. If both are increasing and your balance sheets are softening, how are you able to manage, and build a profitable insurance industry? It is highly complex. It is quite difficult. I think we are all on the back foot as African insurance entities. So I think what I would want to highlight is our capacity to manage catastrophe risk as African reinsurers currently is severely impaired because of the environment in which we are operating. Maybe solutions that I would want to propound, you need the participation of the public sector. Private-public partnerships are critical. If you look at globally, we've had the talk, maybe I'll give an example, the Turkish catastrophe insurance pool. They were able to raise, with the assistance of the World Bank, catastrophe bonds for the protection against earthquake risk. I think 4 or 5 years ago, it was about $500 million. If you look at Morocco, and I think I've got a friend here who is able to comment better about Morocco, they had a catastrophe pool that responded immediately to the catastrophe that you had, the earthquake catastrophe in Morocco. And you also have had in the past, in fact, I'll give another example. You've got, you know, like the Pacific Alliance catastrophe pool, in which the World Bank has raised almost $2 billion in catastrophe bonds for 5-6 countries in the Pacific Rim for responses to catastrophe risks. I think, like Madame Delphine has said, in Africa, what you need for you to be able to respond is not private capital, because I think in the context of what we are faced with right now, private capital is wholly inadequate. It's not adequate to be able to respond. You actually need global multilateral development partners to be involved. You need governments to be involved. You need entities like Africa Risk Capacity to be involved to ensure that you are able to structure, you know, either catastrophe pools, or you are able to access global markets. You know, you actually need to diversify the cat risk globally for you to be able to get adequate protection. But the funding of it has got to, you know, be multi-sectoral. It cannot be the private sector to do it. It can't be left in the hands of the private sector, because you do have, unfortunately as well, even if you are going that route, we have regulatory constraints, number one. You also have, and I think this is quite critical, for you to be able to issue catastrophe bonds, for you to be able to access the capital markets, you need significantly sophisticated capital markets. But you also need very sophisticated risk modeling to be able to assess the risk, the exposures that you are faced with. And currently, as Africa, we lack that. I'm excited about the parametric schemes that are coming up that do not require that, you know, intensive modeling, but it has to be funded. And I think the option cannot be private capital, because as private capital, you've got to be looking at, you know, the profitability of the business. And currently, there's too much pressure on profitability. Thank you.
Thank you very much, Laurence Nazaré, Group Managing Director of Continental Reinsurance. Donc, vous avez soulevé...
You've raised a very important issue which has to do with the involvement of the public sector on one hand, where you also talk about the possibility of having pools by taking, for example, the Pacific Alliance. You further recall the difficult environment of insurance or reinsurance companies. I may talk of the whole context of high inflation and also the valuation of local monies. When, for instance, the money there's a problem with exchange rates, you also suggested or spoke about capital markets. That's a sophisticated capital market, so as to have a good modeling. And by then we've go around and we've given the floor to the two regulators, one insurance company and reinsurance company, and I will have now the chance to yield the floor to His Excellency the Minister Jean-Marie Tessy, start after listening to the various representatives of the private sector. How could we restructure, or how can we structure the public sector for a better coverage? That's a better social coverage and also the coverage of our population against natural disaster. Thank you, Mr. Adama. I think that the public sector should be considered as the most concerned. Even last Friday in Togo, we allocated particular resources so as to go to assist populations affected by flooding in Mono River, a river shared by Togo and Benin, about 800 households that were affected, and up till now they've not stepped to a school because there's flooding and they are cut off from their schools. Schools were flooded. Farms were not accessible. There was no access to farms, and even there were victims with a serious case. Somebody who has his bone broken at tree level, and that person is waiting for operations at the hospital as I'm talking to you. Just to say that the natural disaster is a question devoted to the state or the country, the government. When we do not have insurance mechanism predefined, it behoves the country or the government to be the first person to intervene and to think of the way they will proceed to solve that problem. And it is rather an offer to the public sector to do to provide the different stakeholders, that's the company, insurance and reinsurance companies, to face the problem. And I think that in that context, if we consider the SEMA geographical zones, there is a stronger contribution to be made by our countries so as to see the whole program, because we have the engineering issue. Do we have sufficient expertise, be it from local insurance or reinsurance, for tariff coverage, taking into account the yielding aspect? That's one. The financial institutes, when we talk of financial coverage, we go down to placement and talking of all that have been admitted within the SEMA zone, for instance, because I've heard the session started before me, but we talk of catastrophic or disaster bond. Taking into consideration today, and assuming that we are accepting these types of a system in the way we operate, we could see that that should be covered as far as the regulation is concerned. And from what we know in SEMA zone, borne by our government, I think this will be an issue which will be considered. And when I will talk with Mr. Izo, who was a member of a panel yesterday, and we should take into account the regulatory mechanism about placement that are done as far as regulations are concerned. We should think of how we proceed, and we should consider different investments. And with those investments, if they are not fully put in place with regulated bodies, the second action or commitment of the state, that's my personal point of view. We think of association of co-insurers within our zone, and also the possibility and the capacity to encourage catastrophic pools. But before that, the state also, in the view of the states, we shouldn't overlook. We shouldn't forget about disastrous events, but we should think of prevention. Prevention this time, we may not have a lot to do so as to hinder what would happen. When we consider period of rainfall, the phenomenon itself, immediately, I'm not convinced that we have means to block that. But what interests us is the impact on the communities, which are economic impact. We could even think of places where, for instance, there are some cultures that are done, for instance, agriculture, and we know that at a given period, that zone will be flooded. And we know that there are some areas that are identifiable as a fragile environment. And if you want to build houses, we should know the type of specific housing to put in place, the building to put in place. That is also the role of the state. But still, we should think of prevention by anticipating, communicating, educating, so that the negative impact of flooding should be reduced. Beyond all that, our countries should, to my own understanding, be more committed to put in more resources in going to real PPP as far as reassurance is concerned. Set up or define a particular formula regarding disaster coverage, so that whenever a threshold is met, the reinsurers will come directly to protect, and in that mechanism should be funded, and even the state, the government could even contribute to have a premium put in before then. And as I've said it from the beginning, if disastrous situations are there, the first person concerned is the government, is the state. And if that is not well taken into account, the social report or incomes will be faced by the state. So I think that there's need to think of prevention and grouping, forming a pool of insurance companies, and to see how we can put in some channels that are being used elsewhere within our region. There is also need for experience sharing, and on this panel, people are intervening in other zones apart from SEMA zone that I am aware of. And there could be sharing of experiences to see how we proceed, so that we could better face those negative impact of natural disasters, knowing that if we say that we should pay attention, we should be careful protecting our lands and so on, but the impact of those negative activities is not for today. But what we have to do is to see how to proceed so as to limit the actions in the future. That's my contribution. The government or the state is the first stakeholder to assist the private sector to better structure a natural disaster. Before coming back to you, dear panelists, I would like to give the floor to the audience, maybe 3 or 4 questions, and I will get back to you for other development and conclusion.
Question? Alors, là.
J'ai un commentaire pendant que vous attendez les questions.
I have a comment while you are waiting for the questions to come in.
I'll go back to English, so maybe put your headphones for the ones that don't speak French. We cannot solve the climate impact in Africa with the people sitting at this table. Whether it's government, whether it's insurance companies, whether it's reinsurance companies in Africa in particular, right? Look at our insurance sector. We say in Africa it's only $80 billion of insurance market in Africa. 70% of this is in South Africa. The rest of it is shared among us here. We don't have the capacity. Insurance is all about diversification and sharing, transferring of risk. When we look at the impact of climate change in Africa, no insurance company has enough diversification in their portfolio to be able to cover for this. If there's a flood in Southern Africa, at the same time there's a drought in West Africa, or there's a fire somewhere, or there's an earthquake in Morocco. Most of us here, insurance and reinsurance companies sitting on this room, have a portfolio across Africa. I think it's important that we elevate the debate outside of Africa. The world is responsible for the climate impact that Africa is suffering right now. I think it's our responsibility to all of us on the table to also make the world responsible for finding a solution for Africa. It should be international companies also finding a solution for Africa. Because we can sit here and say we will exclude a risk. What are we going to exclude? Are we going to exclude flood? Are we going to exclude drought? Are we going to exclude earthquake? Then we are not into the climate insurance sector in Africa. And then we say, okay, we will increase the price, or the reinsurance sector increases the price. When you talk about catastrophe, there is no price that can cover, that can make you profitable at the end of the day. You can increase the price by 50%, and your loss will be 10 times the insurance premium. So I think it's important that we take this debate a bit outside of us here. It is our responsibility to also challenge. We have some people from Swiss Re here that were previously from, that are now with Continental Re. I will not say any names, but I think the global reinsurers have a bit more option when it comes to diversity. They insure Africa, they insure Asia, they insure North America, and not everything happens at the same time.
Okay.
So, no, let me finish, sir. So I think it's important that as we're having these debates, that we're not so, that the regulators don't think it's just your responsibility in DRC to help solve this issue. I think there's a conversation that you need to have with the rest of the regulators across the world, right? Same with the government and same with the insurance companies. Je me tais.
Merci sous vos applaudissements. C'est sa conclusion. Donc.
Her conclusion. That's a global approach. When we talk of lawsuits and damages, this is an approach which is debated during the different COP, and the approach is global. I will now yield the floor to Mr. Kalenda to draw his conclusion. Thank you for giving me the floor, and I think that we've raised some questions. And here we should think of two problems. The one have to do with the global capacity compared with the taking into account the size of the disaster. Madame Taro said it, that has been touched by all the participants, and we do not have the capacity of coverage. That thinking of the size of the disaster, but from the regulator side, how can we meet that need? And we think of the global capacity, and I do agree that we are having a specific issue. Even if the size is limited, we talk of profitability. But as a regulator, our concern is that the insured people are taken into account, and we talk of a premium of 100. The insurer is still there because we are the one to give go ahead for reinsurance to move from premium. And when we have the statistic from 100, for instance, 50 or 60 are understable, and we put it in regulatory aspect. Another has to do with operation costs. That aspect, we don't have it with the natural doing this, and on that we have to put all our intelligence together so as to know whether we put everything into account to see what should be done with reinsurance if things are not taken into account, we will see what is there, and we could keep to that zone and to see what should be taken on board. And it's an issue of collaboration with the state insurance and reinsurance companies to see what should be done so as to guarantee that our companies and operators and insured people will be reassured. And this not we do not have in our market, and I do agree with what Madame Terrell has said. Thank you, Madame, but thank you, Director of ARCA. We need the statistics. We also lack data, and I must say that this is something new, and I will give the floor to Madame Broad to draw her conclusion. Madame, the floor is yours.
Thank you. So we are here talking about boosting capacity. We are looking at our number one risk in the world, actually the existence of our Earth. It is very clear from the conversations that we've just had that it is beyond the industry, private sector. And I thank the Minister for highlighting the responsibility of the states. The question is, how responsive are the states? In Ghana, we just had our dam, the Akosombo Dam, at risk of damage. We had to flood the whole place to ensure that we could save the dam. I will not even touch on the damage that happened and the lives that were at risk. But to conclude, I really think that do our leaders, government leaders, do they understand the challenges of the industry? How is the industry partner voices will be heard when they go to these global conferences, to make sure that our African leader voices are heard and they take the right people and even have the ability to take some of the industry leaders. So for me, to conclude, we have a small window of opportunity. There's about 7 years left for this climate degrees that they are talking about. We don't have time at all. African leaders attending COP28 must understand what the challenges are, and it is the industry's responsibility to ensure that they understand and let our voices be heard so that we can get the funding that we need to support Africa. Thank you.
Thank you very much, Madame Brown. Donc, une approche public-privé pour les...
A PPP approach for international exchange for risk coverage.
Pour sa conclusion.
Yeah, thank you for this opportunity, because I believe I will be doing injustice to this gathering here if I do not let you know that we have a solution. We have a solution. Africa's mandate is to support the African economic development. We know the impact this would have on every country, and right now we have a toolkit solution. I was happy to hear or see the seriousness from the Honorable Minister, and we can guarantee that in 18 months, the problem is not whether there will be catastrophe, but how prepared are we? What do we want to do? We work with partners. The question of even underwriting capacity. Every reinsurer here has been writing flood since they started. But there is no claim that even breached, except one, breached our deductible, not to talk about our capacity. So we have a lot of capacity. However, insurance is all about pooling. This is something that government can come in, and we have international partners we can work with. We have donors we can approach to support governments to initiate the process. And then we can structure it, we can align it. We see it as a problem. We're already talking with some governments, because we started the process, creating awareness and helping them to prepare. Because we say this is getting more frequent and more intense. One day, the dam, the case of Libya is a dam. They are afraid of what will happen with the East African one, which is like the biggest. How many countries will it stretch to and impact? So there is a solution. The solution is something that can be discussed maybe after this. Africa should take their problems in their own hands, because we can, in the world today, nobody works in silos. We work with partners. And our business is all about spreading risk. No one can take any risk. We spread risk locally and internationally. So it's just to assure you on that. Thank you very much.
Thank you very much, Mr. Ken Agobevia, Africa Ray. Donc, the solution existe. Laurence Nazaré, les solutions existent. Quelle est votre conclusion?
Solutions exist. What's your conclusion? Nazare.
I think in terms of my conclusion, I'll still go back to the fact that, you know, confronting the climate change risk is not a viable insurance or private capital proposition. I think we need to be looking at this in the context of a context similar to what you are seeing when we discuss the transition to net zero, for instance, where we're talking about a just transition. I think what we should be looking at is the extent to which global partners can come in and take responsibility for the disproportionate impact of climate risk on the continent. And that disproportionate impact is coming onto a continent where you have got a huge protection gap. And what I mean about the protection gap is the gap between the economic losses that we see and the insurance losses. I think Ken did allude to the fact that as reinsurers, we don't see claims. Claims in the context of the catastrophe in Morocco are minimal, Libya minimal, Mozambique, Cyclone Freddy, losses minimal to the insurance sector. So there's a huge protection gap. And unfortunately, the people being affected are the poorest of the poor on the continent. So I think what we should be looking at is a global intervention to really right the wrong of the economic injustice that we are seeing. And it has to be an intervention that is focused on resilience for that segment of our population, which is by far the largest segment of the African population. And I think private capital is not the solution. I don't think global reinsurers can come in. They are not charitable entities. They are not going to come in to resolve this problem. It has to be looked at in the context of how global multilateral partners can interact with our local governments and access our skills and also our knowledge of the risk terrain to come up with a global solution that focuses on mitigating the risk on the underinsured masses on the continent. Thank you.
Thank you very much, Mr. Nazare. Donc, une solution globale.
Global solution, global approach. I will now give the floor, with your permission, to the Honorable Minister for his last word. And after this, we'll conclude. Thank you, dear friend. Thanks to the panelists. In sum, let me reiterate the commitment of our government to support all solutions to assist our compatriots in the various countries and really address their issues of vulnerability and precariousness. The catchword here is that I told the story, the resources mobilized by the head of state in Togo and the government to support the victims and alleviate their sufferings. We might as well use them elsewhere had we had a shared mechanism between the market and the public to allow each and everyone to play his or her role, perhaps to anticipate. Now, the role we are playing is to assist the insurance sector to be up and running. We will be paying heed to your demands and shared formulas and report back to our authorities to alleviate the sufferings of populations that are victims of these calamities. Thank you. A round of applause for the Minister. Here we are at the end of this panel on the insurance sector addressing disaster situations. Can the photographers come forward for group photograph?